Quick disclaimer before we start. This video and report itself are for educational purpose only. Nothing here is buy or sell advice. I am not SEBI-registered advisor, and this is not investment advice. And you should do your own research and consult a registered advisor before making any trading or financial decisions. Now, with that out of the way, I'll I've been getting so many messages about this report on my X handle or on the Telegram, all asking some version of the same thing. How do I actually read this section by section, and what am I supposed to do with it? Right. So genuinely, thank you for that. The response to the swing action report has been incredible, and this video exists because enough of you asked for it. So today, let's walk through it top to bottom in the exact order the report itself runs. So starting from market health till the performance tracking, where I hold my own picks accountable, and let's get into it. Right. So right now, the first section is on the screen, which is section 1, market health. So this is your overall market read or the regime read. It could be like caution, favorable, or avoid, right? So it is driven basically by the market breadth index, right? So which is also called MBI. So favorable means whenever you see favorable over here, it means that this market condition supports new swing entries at a normal size, and the reversal signals are valid. Right now we are looking at the caution tag, which means be selective, reduce size, only A plus setups allowed, and lean on the names that are already participation confirmed in the focus industry list, which will come in the second section. Right. Avoid means be defensive. The framework's positive signals simply aren't validated in this regime, so that means you stay away from the market, protect your capital, or maybe invest in something like debt fund, right, which is safer option. So these are the three or four market health parameters. On if you look at the right side, there are parameters like stocks above 20 SMA, stocks above 50 SMA, 200 SMA, advanced decline ratio, net new 52-week high low, and stock with RS greater than 70. All this parameter can help you understand why there is a caution tag. So if you currently see, we just have 30% of the total stock. We are considering all NSE as a stock universe here, which is more than 2,000 stocks here. Yeah, out of that, only 30% stocks, showing relative strength, which is greater than 70. So that's how we read the market health here. What is the action out of this? So action for individual trader is, this section sets your posture for everything below it. So position size, how aggressive we are today. So read this thing first, even every day, before looking at any single industry or a stock level details, right? Now coming to the second section here, right? So what is second section? This is the core of the report. Basically, the industries I would actually focus your stock picking on today, right? So looking at this section, I'll see what all industries are performing at its best, and I'll pick my trading opportunities out of these three industries. So every name here cleared two separate bars. First is it is either fresh entry building or like day 1 to day 3 of this trek. So you can see here this particular industry is appearing since last 3 days, right? This is appearing since last 2 days, right? So it has cleared that bar, and this is the part most people miss. Like, it also had to clear a quality floor, right? So what I mean by quality floor is it has participation above 40 or 50 level. That means most of the stocks are participating in order to make this industry at this level today. So if you see here, this stock has 80%, this industry has 80% of the stocks above its 50 SMA and 20% of the stocks above its 20 SMA. If you see, out of total stocks in this packaging BOPP industry, there are 60% of the stocks higher RS, right? RS greater than 70. So it shows that there is a strength building inside this industry. And if you see any good setup like high tide flag or something like low volume pullback, you can always prioritize those setups compared to non-performing industries here. So again, coming to the similar point, what is the action for the individual trader here? So this is your hunting list. Start stock level scanning inside these industries first. Specifically in the report itself, it is ordered properly. So this is more priority than the number two, which is facility management here, right? So you can start a stock level scanning inside these industries, and I'll share a link which has a CSV containing all the stocks from this particular industry or any industry which is displayed on this report. So let's look at the third section here, which is the building interest. Now, what is building interest? So building interest means a newer or earlier stage selection. So these are early building or hunting ground industries that correctly miss the quality floor I just described, right? So if you see here, we do have hunting ground and early building industry over here, but see it has a quality score over here. Like there is 80% participation. It has a good breadth, like 20 and 50 SMAs for the 80% of the stock, above 20 and 50 SMA. Now, what is the difference in building interest? So building interest might not have that level of participation, right? You can see here it has 36% participation, it has 71% participation, right? But like the stocks here are not as we see here, like 80% of the stocks above 50 and 20 SMA, right? So what is different here? So you can see here in the petrochemical or the polymer industry or in the paper industry, uh, as it is appearing in building interest since last 2 days in this report, right? What is the difference here is it is creating pocket pivot. Pocket pivot is basically a way to look at the volume indicators. Like these are the industries which is not matching the quality floor, but there are high probability that this will move to a focus industry in a coming day, right? Because it shows a real pocket pivot activity. A stock trading its heaviest volume in last 10 session on an up day, right? That's the faster tell that the slower participation states the floor checks. Now, the important thing here is this is kind of heads up, not a buy signal. It's still weaker structurally, but it gives you kind of earlier evidence than the focus industries, and it never gets promoted into the list unless it clears the quality floors, right? Each entry tells you exactly which floor condition it is still missing and how many days running it's shown up here, right? So it's shown up here and it says like missing floor. So paper industry you would have found in the focus list, but it is missing the participation by just 4%, right? So let's say if in a day or two this industry perform good, then you will find this industry in the focus list, right? So again, the same point. What is the action for individual trader after looking at this particular section, right? So I would personally suggest watch, don't act yet. If one of these graduates into a focus industry list in next few days, right? That's your real signal. You saw it coming first. That's the benefit. So you can figure out what all good setups are there. You can prepare a watch list out of it, or maybe start with a very small position size if it is in a building intersection at this point. And once it is graduated in the focus list, you enter with a full strength, given that you have a good market health at that point of time. Okay, so that's how building interest works. And now let's move to the sector context. Okay, so this give you a high level overview of like which all themes are in play, right? So it's a kind of zoom out level, and the zone mix here across every sector. So these are basically a zone mixes at the sector level. So petrochemical might have three or four different industry, but at a sector level as well, the petrochemical is at hunting ground, right? But if you are acting on a specific sector, you can cross check here in the focus industry, right? Do we see anything in the focus industry out of this sector? Then that gets some more priority. So it's basically a zoom out level. Okay, so it will tell you which sectors are constructive. Hunting ground at the sector level, which is actually the stronger, more positional read in this framework, right? Backtested. Also, this is backtested at a longer holding horizon than the industry level hunting ground, right? And which sectors are under sustained distribution. So this tells you, like, if you are holding any long term position and you see that a sector is in a distribution warning or avoid section, you can start trimming your positions in those sectors specifically. So action for the individual trader is use it as a tiebreaker, maybe choosing between two similar setup. The one sitting in the hunting ground sector gets the edge, right? So petrochemical, I mean, industries within the petrochemical sectors will get more priority than the industries within the, let's say, aerospace and defense, right? And that's what the data says. So here again, it will tell you like what are the sectors which are under distribution. So FMCG is in under distribution since last 12 days, right? Agrochemicals last 7 days it is in the distribution, right? So we have all these things in the detail, and now let's quickly look at the next section, which is a sector tailwind watch. So what happens, like, today you have a let's say packaging industry in a very good shape, right? It's in a focus industry list. So these are the sectors or the industries which could do well. So, like, for an example, when it shows up here, industries that are still in the avoid list, but let's say one industry is still started showing a good outcomes and it started performing, but there are related industries in that sector which are still in the avoid list. So you can start watching out, like, reversal plays in those industries, right? So again, the action for the trader is a weak tiebreaker at the best. Don't treat it as a standalone setups, right? Yeah, we have a dedicated section for the reversal watch as well in our report. So if the reversal watch section appears, the same, these are the beaten down structured industries. Like you see here, the stack breadth is nearly zero. That means, um, you know, the stocks from these industries are not structurally good, considering like 20, 50, and 200 SMAs. These are not structurally good stocks. But participation level, you can see it's 80%. That means somebody is putting in money, like volumes are increasing in this industry, and these are the positive, net positive volumes. Okay. These are beaten down structure industries where participation is already above 40 or 50% plus, right? And these are expanding in terms of money flowing into that industry. It's kind of early accumulation before even structure catches it up. Okay. It only fires in a favorable or a caution regime, right? Back to the section one, which we discussed earlier, right? Because it tested negative in avoid regimes, so it hide itself there automatically. Action is watch only while the name's current zone is still in a warning zone. Don't front run structure with the size. Okay. So these are your watch list candidate. If you see good fundamental driven companies over here with a structure pulling up over the 200 SMA, 50 SMA, and 20 SMA, and if you are looking at some kind of tight flag or some kind of low volume pullback, you can definitely consider. But I would still suggest, like, focus on the section one and two more, which is the focus industries and building interest kind of industries. That will always outperform this kind of reversal plays. Let's look at the next section, which is the warning section. So let's understand what warning means. So arguably the most important section for protecting capital. Okay, not so here we are definitely not finding any new ideas for the trade. So the first part is exited focus zone. So there are industries which will come out of the focus zone. It will land over here, right? These are basically a demotion out of the early building or hunting ground, which needs two consecutive confirming days before they show up here, right? So anything you see here is a real break, okay, not a one day flap. So a note like DW visit 2, right? You must be seeing it here, right? Visit hash 2 in 2 weeks, okay? It flags a repeated visit in a distribution warning zones. Okay, so this industry tried to climb up, but again it came back into a distribution warning again. Historically, the real negative around minus 24 basis points. So I have backtested this, and it's something like minus 20, 24 or 25 basis point over 10 days. So a note that the sector is still hot, soften it, right? Those test close to a flat instead of a usual. And the second part is the distribution warning. So it's basically a breadth fading. You have stocks which were earlier on above 20, 50, 200 SMAs, which are now going back under the structure of 20, 50, and 200 SMAs. Okay. So that we call a breadth fading. So first time visit here are, so if you see any industry which comes here first time, those might be noise sometime, but repeated visit here within 2 weeks are one that back the number. Okay. See here, you can see here, it's a third visit in the distribution warning in last 2 weeks. So if you take trade in this kind of industry stocks, that means there are high chances that you will end up with the stop losses here. Okay. So these are the areas which you should focus and avoid trading currently. Okay. Yeah, action again here is, keep watching this section basically. And if you see that the stock you are trying to trade is out of these industry, then I would say, totally avoid. And the next part is, and the last part most likely, is the performance tracking. It's the last section. This is accountability, not a new signal. It tracks how every industry have ever featured in the focus industry. So like a day or two before, packaging BOPP might have appeared, right? This row says that since appearance, the average return of that industry is 4.4%. Okay. And the last day return it is 0.2%. And out of 5 stocks in the packaging BOPP industry, 2 were moving upside, 3 were on the downside. Similarly, if you see the facility management, it recently appeared in a 1 day average industry level return is 1.8%. That means if I equally buy all the stocks from this industry, at the end of the day, I'll earn 1.8%. Okay. And 4 stocks went up, 0 stocks went down on that particular day. So this is basically a performance tracking. Like if you are looking at something today on the focus list, how it will or it is performing. So I specifically added this section so that you get a confidence on the report, you get the confidence on the analysis that it is working or not, and what is the hit or miss ratio here, right? So action is use this section to grade the report itself. I'll say, like, you can say it's a 4-star report or 5-star report or 3-star report, or it's totally dumb report, and decide how much weight a fresh focus industry entry deserve. Okay. The hit rate is right here, updated daily. So like packaging BOPP is still in the focus list today as well. So if I generate the report after the closure of the market and on the next day, if it is still there, I'll see that, since last 3 days it is there. Since its appearance, it gave me 4%, 6%, or whatever it is. Right. And yeah, the same way you can read it. Yeah, that's how you can use this report in your swing trading. And believe me, it works really well. And this report is generated specifically for a swing trading frequency. If you are looking at positional trading, then this report might not work. So this is specifically for equity cash market swing trading, because depending upon the structural change and how money gets into industry or comes out of the industry, it will reflect the industry state directly in the report. Okay. So quick recap of the order: market health sets your posture, focus industry is your hunting list, building interest is your early preview, sector context and tailwind are tiebreakers mainly, warning protects you from the downside drawdowns. Right, you can decide exiting your positions based on appearance of industry over there, and performance tracking keeps me honest always. And if this was helpful, drop a comment with which section you want a deeper dive on next video, and I'll see you in the tomorrow's report. And and of course, you can download the latest report from my Telegram channel. I'll drop the link in the description. And see you then. Thank you. Bye.